Welcome back. Now, the rand has experienced notable fluctuations throughout the year, influenced by both domestic developments and global economic conditions. According to Aluma chief economist Frederick Mitchell, the currency's undervaluation points to a substantial risk premium. He joins us now for greater perspective on the rand's performance so far this year. Thank you so much for your time and joining us in studio, Frederick. Now, just put into context the level of rand strength and or dollar weakness that we have seen so far this year.
I guess it's a bit of both.
Yeah.
Dollar weakness that we saw in last week when the Congress shut down.
Yes.
Which is kind of a.
I'm even surprised that's still happening.
I didn't. It was quite expected. It was being discussed, and now it's just happening. And I guess the rand gets some boost out of that in the short term until that is being cleared up, and then it's where it should be.
Yeah.
For now.
And it's actually interesting that you say it is a bit of both rand strength and dollar weakness. So would you say that it's a perfect combination of global and local factors?
I wouldn't say rand strength as much as it's dollar weakness at this stage.
Okay.
I would just say we expected much worse, and then the market already priced it in, and we actually surprised where the market actually priced it in. So I wouldn't say it's rand strength, because on what strength are we going?
Okay. Well, talking about that, right, because you highlight in your note the rand's undervaluation that signals an embedded risk premium in the currency. What does this story tell us, and does it mean that there are certain factors that are keeping a lid on the rand's upward momentum?
I would say so. I guess if we look at the rand and we look at what's going on in South Africa, holistically, economically speaking, if we do the right things, we might see the rand even strengthening more. But if we don't do that, the premium's going to get worse.
Yes.
Like I said in my note, it's anything between let's say 3 and 6 rand that the fluctuation can be. So there's room for the rand to actually improve if we do the right things.
Yeah.
With a big if.
Okay.
If government can get the act together and do the right things.
So, I mean, it's us, right? And obviously you're speaking to the subdued economic growth picture that we are seeing. And of course, we still need to get those structural reforms in place to actually boost the economy. But also, could that be made worse by international policies right now? We're talking about a new tariff regime. We're talking about AGOA, where we have not found a solution.
It can be made worse. Let's be honest about that.
Yeah.
We can't posture. I'm in my personal opinion, I would say we as South Africans need to have a really neutral stance towards international politics, because we stand to gain or lose much more than other countries do, because we're a small open economy and we don't want to take sides in global conflict. We need to be doing what's best for our country and our economy, and stop meddling in what's best for other countries, so to say, which spectrum they might lie on. Yeah.
And I mean, with this, that also means that we are going to have to deal with elevated unemployment for a while as well?
That's difficult to say. We have seen when the economy is growing, it's growing jobless.
Yeah.
We don't see a lot of absorption. And then if you add to that, you look at the economic growth and you look at the population growth, you will see that the population growth outstrips the economic growth, and that's not sustainable. So actually what it's telling us population-wise that we're getting poorer every year. So that's not a good thing to be. So we need to do the right things where the economic growth is better or greater than the population growth at best, or at minimum.
Yeah.
So that's something that we need to address as soon as possible.
Is monetary policy in South Africa at this point supportive of rand strength continuing?
I would say so, in the short term at least. We've seen that the US have lowered the interest rates as well as the UK, while we kept our rates the same. So basically the interest rate differential between South Africa and, let's say, Europe, or let's say UK and the US has been a bit greater, so that tends to get money or warm money or hot money flowing into South Africa or portfolio flows for some extra, say, interest rate.
Yeah.
So in the short run, that does play a role, I would say so, but we can't say keep it there when they lower the rate, so, or maybe lift the rate. So it's very dependent in the short run at least.
Yeah. Are you also creating scenarios then in which this upward momentum in the rand that we've been seeing maybe reverses if certain risks manifest in the macroeconomic environment?
I would say so, yeah, definitely. If we lose access, let's say, to the US market, which is one of our greatest export markets,
yes,
and we get restricted access, and we do see some closures of businesses and reduction or reduced output levels in, say, manufacturing, specifically in automotive parts and vehicles and agriculture produce, we're going to see that having an effect on the rand. We're going to say that have an effect on the economic growth for the third and fourth quarter, maybe into next year.
Does this then, if those risks do manifest and the rand reverses course, could that change the inflation picture?
I would say so. We are largely dependent on, my estimation is that a great part of South Africa's inflation is driven by let's say, products and services that we import. And if we have a weak exchange rate, that tends to have inflationary pressure on the South African economy that filters through the value chain down to the consumers and businesses and throughout the economy.
Yeah. I know year end is about 3 months away and you do not have a crystal ball, but it is the third quarter and the rand's really done well. Any notable predictions that you have for the coming months?
That's like looking in my cup of black coffee and then make a prediction. It's quite difficult. We'll have to see whether we can negotiate, let's say, a trade deal at least, or in part to soften the blow of the 30% tariffs of the US, and hopefully we can see some momentum in the manufacturing sector and the agricultural sector, and there's not too many, let's say, job losses and loss of production, which might influence around. That is in my wish list for Christmas. Okay, well, all of us. Thank you so much for your time, Pleasure. Frederick. Really, really appreciate your insights. That was Frederick Mitchell, Chief Economist at Aluma.